Hey everyone. So you've probably seen Palantir stock price crash following its earnings release. I wanted to highlight one of the reasons why I think that's the case here in this video. I also want to discuss Palantir's shareholder dilution a little bit in this video and highlight where the company thinks it's headed for the rest of 2024. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so let's start with one of the reasons why I think Palantir's stock price fell following the earnings release. And that is because the company said that they expect expenses to ramp starting in the second quarter through the back half of the year. We remain focused on calibrating expense growth below revenue growth for the full year. So when a company says they expect expenses to ramp starting in Q2 through the back half of the year, it means that in the second quarter, expenses are going to be higher than the first quarter. And then in the third quarter, they're going to be higher than the second quarter. And then in the fourth quarter, they're going to be higher than the third quarter. That means expenses are just going to rise like that throughout the year. And of course, that makes investors nervous. It's telling investors that you're going to spend more and you're going to spend more at an increasing rate throughout the rest of the year. Now, investors understand that Palantir's business is seeing strong demand, and that's why it's investing. It's investing in hiring more people because it's seeing such strong demand for its service. But I think what investors were hoping was that Palantir could deliver on that rising business with existing capacity, with existing staff. They were hoping that Palantir could keep their cost flat and then revenue would just come in and that would create that larger spread between cost and revenue. But what Palantir is telling investors is that no, revenue is going to grow and it's going to grow faster than expense, but we still need to ramp up expense. We can't fill what we think is going to be a rising demand environment with existing capacity. We can't do that. We don't have the capacity to fulfill that growth without hiring more, without having more capacity. So that disappointed investors because they thought, revenue was going to grow, costs were going to be flat, meaning profit was going to expand. So I think that was part of the reason the stock price fell. All right, so now let's move on to shareholder dilution. So Palantir saying that it repurchased roughly 500,000 shares as part of their share repurchase program. As of the end of the quarter, they have approximately 990 million remaining of the total original authorization. So they purchased some shares, which means that they reduced the number of shares outstanding. So I want you to understand why shareholder dilution is so important. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. Okay, so now that you understand why shareholder dilution is important, you can see Palantir over the last 3 years has diluted investors aggressively. They now have 2.348 billion shares outstanding, and that's up from 1.9 billion in July of 2021. So the start of share buybacks and reducing the number of shares outstanding would be a welcome sign for Palantir stock investors to be. So the company ended the quarter with $3.9 billion in cash and equivalents. So they have plenty of money to buy back shares and reduce the number of shares outstanding and alleviate one major investor concern. And I think they're on schedule to do that. Okay, so let's move on to where Palantir thinks they're headed for 2024. And they raised their revenue guidance for 2024 to a range of, let's say, 2.68 billion at the midpoint, and income from operations of 868 million to 880 million. And they reiterated, now that income from operations was also an upgrade, and then they reiterated their free cash flow to 900 million at the midpoint, and they expect to be profitable in every single quarter of 2024. So they raised the revenue target and they raised the operating income target for 2024. That should reassure investors, because remember, to start the video, I talked about how they're spending more money. So investors may have feared that that higher spending may have led to lower operating income for the year, but instead Palantir is raising its operating income guidance and raising the revenue guidance. So it's telling investors again, reminding them like, yes, we know we're going to be spending more money, but we expect revenue to grow faster than what we're spending, and that's going to create more operating income for the company for 2024. So by the end of the year, they expect to be more profitable with more revenue, and if they complete these share buybacks, shareholder dilution to be limited. And if they achieve all of those targets, it's likely Palantir stock price will be higher by the end of the year compared to where it is today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.